what you also see is actually very significant insider ownership. Just over 12%, actually getting close to 15% right now. Insiders participate in every single private placement, buy regularly on the open markets. I've personally put in $300,000 of my own cash. We have paved roads straight to our deposits that can drive from anywhere in North America to the top of the resource. Our resource is already almost 2.6 million ounces. So that's close to 14 billion Canadian dollars worth of metal, all very close to surface. When you have something good, you really have to hold on to it. So for the people that are waiting for the private placement, don't wait for a private placement. That's my first message.
Good morning, good afternoon, or good evening, depending on where in the world you're signing in from today. See, it's a pretty international audience, so really appreciate everybody's time and joining us. I've got with me today Marco Roque, CEO of Cassiar Gold, to explain how the company is exploring, expanding, and delivering. Marco, how are you today?
I'm great. And you, Romeo?
Good, thank you. So here's how today's going to work for the folks in the room. Marco's first going to go through a presentation outlining the opportunity at Cassiar. For those of you familiar with the story, it should have a couple updates and be a good refresher. But for the large number of you in the room who I think are maybe not familiar with the story or hearing about Cassiar for the first time, be a good look into the opportunity for the company. Once he's done with his presentation, I'm going to go through a number of questions that I've got just based on that presentation. But then this is an interactive event, and I'm eager to hear from you guys in the room. That chat button on the bottom right of the screen, enter your questions anytime during today's event, and I'll get to as many as we can today. If for whatever reason I don't tackle your question, whether it's way off topic or we ran out of time, I'll be sure to get those questions to the Cassiar team either way. I'll send them the full transcript, but I'll try to get to as many as we can today, and I reckon we'll get to most of them if you plug them into the chat earlier in the event. The other thing I'll say for housekeeping is today's event is being recorded. It will be available for replay. You'll probably have it at about 4 p.m. Eastern is my guess. It'll pop right in your inbox, but also be available on Six's YouTube channel. But enough out of me. I want to get to the protein of today's event. And Marco, I'll throw it to you to share your screen and get us started.
Thank you, Romeo. And thanks for organizing this, and everyone for joining to listen to this presentation and the Q&A as well. I would just like to bring your attention to the disclaimer and the forward-looking statements that I will definitely be making today. Can you see the slides rolling clearly, Romeo? Everything good?
Looks great.
Awesome, thank you. All right, so for those of you that don't know, Cassiar Gold is a Canadian gold explorer focused on our flagship asset in northern British Columbia in Western Canada. I believe this to be one of the most undervalued and exciting advanced exploration projects in British Columbia, which is a great jurisdiction. To give you just starting with a high-level overview, what makes Cassiar Gold unique. First of all, is really the people. So we're led by a team of executive board members that have a track record of discovering, permitting, building, operating, selling mines, across Canada, across the world, billion-dollar plus projects. So we definitely have the skill set to advance this project and eventually take it to production. The other key aspect about the company, especially in today's world where you're seeing geopolitical risks everywhere, we are in a tier 1 jurisdiction. And more importantly, we have 2 mine permits already in place, which is very, very valuable and full community support. And again, a great jurisdiction. So we have the right location. We also have already a quite nice foundational resource. We put out an updated mineral resource estimate a few months ago, early in the year. So we now have new category indicated 410,000 ounces indicated at 1.43 grams per ton, with an additional 1.9 million ounces inferred at 0.95 grams per ton. This resource starts at surface. It's open pittable, bit constrained, with 91% of the ounces occurring within 150 meters from surface, with a lot of room for expansion laterally and at depth. This resource occupies just over 1 square kilometer out of a 590 square kilometer land package. So although we are advanced exploration and we have a lot of pre-development or development assets, given that we are past producing, we really only started to scratch the surface on this very, very substantial district. And talking about historical production, we within our project, we control 5 past producing mines. The Taurus deposit, which I just highlighted, sits just around one of the past producing mines. So we have 4 additional ones and a 15-kilometer trend with a lot of room to grow. The other key aspect of our project and company is, unlike most projects, we have paved highway access to the deposit and the project itself. We have grid power, we have water access, we have a fully owned and permitted mill. I mentioned mine permits already, and 160 kilometers of access roads that really allow us to operate very efficiently today, but also lower significantly the barrier for development when it comes time for mine decision and production as well. And lastly, we've in the last 5 years raised $15 million. We've got our project and resource from 0 ounces to 1 million ounces to 1.4 million ounces and 2.3 million ounces combined over the last few years, significantly advancing the project and raising significant amount of capital. But the real kicker for the company is not only the potential, of which we have a tremendous amount, but really the valuation. Our market cap right now is around 40 million Canadian, just under $30 million US. We're well cashed up. And we've done quite a bit of drilling over the last few years and just completed a 7,300 meter drill program for which all the results remain pending. So stay tuned for what's coming. Now, talking a little bit about the market is what we're seeing in M&A. So we're seeing geopolitical risks rise around the world. A lot of companies are taking refuge in safe jurisdictions like the US, Australia, or Canada. And Canada has, the M&A cycle for gold mine development hasn't really kickstarted, but we're starting to see a few. We saw, just recently, Fresnillo making an offer to acquire Probe, which has 10 million ounces for 780 million, Canadian dollars. Coeur Mining with New Gold, Newfound Gold acquiring Maritime. We can go on and on, but the M&A is starting to pick up. The high gold price is creating perfect conditions for basically a new M&A cycle to really kickstart. We're starting to see the early innings of it, but as I mentioned, I think we're just getting started here, and that becomes really quite relevant when you look at our project and evaluation on an enterprise value per ounce on a ground basis. Compared to some of our peers. This is already getting a little bit dated, given that Probe has just been taken out. You can see Cassiar Gold here on the left, with the grade of the indicated as well as the inferred resource in line with a lot of our peers within the region, but with a valuation at enterprise value per ounce on the ground of below $16 Canadian, which is extremely attractive compared to many of our peers. With many of our peers trading anywhere between $50 to $200, in some cases $500 per ounce on the ground. So we're really undervalued with a lot of room to grow. And we provide tremendous upside to the gold price in this environment where gold is trading at $4,000 US an ounce or almost 6,000 Canadian dollars an ounce. We're trading at $15 an ounce, providing a really great opportunity to get exposure to this sector for a company that is very, very fast growing like Cassiar. So moving on to the slide, just to give you a sense of our cap structure. So Cassiar Gold has around 147 million shares outstanding. I mentioned the market cap, I mentioned the cash. We have a little bit of newsletter coverage and some analyst coverage, but we're significantly under the radar, and that's actually one of the reasons for us being so undervalued. What you also see is actually very significant insider ownership. Just over 12%, actually getting close to 15% right now. Insiders participate in every single private placement, buy regularly on the open markets. I've personally put in $300,000 of my own cash this year into the company via those two mechanisms, and also around 1.3 million in the last few years with an average cost that's slightly above the current share price. So, definitely skin in the game, definitely committed to the project, and we'll see this to eventually production, come hell or high water. Another key aspect of the company is as well, we've been able to add in the last 5 years, a decent institutional shareholder base focusing on, specialist mining funds and junior gold funds as well, that really highlights the potential of the project that we have. And one thing that is also important to highlight is the liquidity we're having in the last few months. So in the last 3 months alone, between the exchanges where we're listed, we traded over half of our share registry. So we had a complete renovation in our share registry. And I think given that we are just have immediately pending news with drilling, met studies, and PEA that's coming over the next few months, I think we're really good setup for a potential re-rate, and that I think is quite important to highlight that as well. So zooming into kind of our region in our asset base, so we have two districts: the Cassiar Gold project, which is our flagship in northern British Columbia, just 200 kilometers north of the Red Chris mine. That's majority owned by Newmont. That's along Highway 37, the main highway that connects BC into the Yukon. So great access. And we also have this Sheep Creek district in southern British Columbia, also very, very prospective. It produced until 1951 nearly 750,000 ounces at nearly 15 grams per ton. So it's certainly a very exciting project as well. But as mentioned before, we're 100% focused on our Cassiar Gold project in northern British Columbia, just north of the Golden Triangle. So zooming to the Cassiar Gold project, to give you a quick overview. It's a massive district, 59,000 hectares, 590 square kilometers, 27 by 25 kilometers contiguous land package. We have Highway 37 there, bisecting our property in half, which is, you see this black line. That highway is what we use to separate the Cassiar North project area, which is north of the highway, from the Cassiar South project area, which is south of the highway. No clear geological boundary, but actually we have two dominant styles of mineralization there. At Cassiar North, what we see is bulk tonnage, gold repeatable, with mineralization typically starting at surface, running at around a gram to a gram and a half, disseminated, and with open pit targets there. And in the south, where we have this very discrete high-grade underground veins that are on average 3 meters wide, with grades running between 10 and 20 grams per ton. Very high grade with a lot of potential there, especially because those two areas with the 5 past producing mines are within mine permit as well. So it's a very, very clear advantage for us as an operator. Some things that are worthwhile mentioning in terms of our asset base. One, the road access. We have paved roads straight to our deposits. You can drive from anywhere in North America to the top of the resource and park your car on top of what is now 2.34 or 2.6 million ounces, depending on the cutoff grade starting at surface, which is what you see with this pickup truck here at the Cassiar Road. So great road access year round. And also the great advantage that we have in our district is the topography. We have ideal topography. The Golden Triangle is very famous for the geological endowment, but Golden Triangle has very steep mountains, glaciers, heavy snowfall, and comparatively, we are in a much, much better environment to operate, which is also another key competitive advantage for our district and for our project as well. We have additional infrastructure that is extremely valuable. 17 historical portals, 25 kilometers of underground workings connecting the surface through the end mine sections of the high-grade veins, power lines. We have access to grid power, a fully owned and permitted mill. All of this infrastructure is extremely valuable, especially for the high-grade underground veins. We have tailings facilities, 160 kilometers of access roads, in addition to the paved roads, as well as a 48-person camp. So a lot of infrastructure already in place, and again, massive competitive advantage for us as an operator compared to most exploration projects that are, most of them in the middle of nowhere with access only via, airplane or helicopter. So it's really, really great to have this already in place. As I mentioned as well, we have 2 mine permits already in place, very valuable. So we have a Taurus Gold mine permit, which is highlighted here in orange, overlapping the salmon-colored resource at Taurus. So that covers most of the Taurus resource and 2 tailings facilities there. We also have the Table Mountain mine permit, roughly 20 square kilometers, covering the 4 past producing high-grade underground vein systems, 2 tailings facilities, as well as a fully owned and permitted mill that you see here in the picture, which is in good condition, and last operated in 2007, and then partially refurbished in 2010. Another really great competitive advantage that we have as an operator. Now, as I mentioned before, we have kind of 2 dominant styles of mineralization, mostly in the Cassiar North, where we see is the open pitable, around a gram and a half per ton, disseminated gold, and in the south, the high-grade veins. So in terms of the high-grade veins, just to quickly highlight what we have, the grade is extremely high. You can see the production table here in blue from the 4 past producing vein systems that operated mostly through the 80s and 90s, with grades between 10 and 21 grams per ton, over 300,000 ounces of historical production. These veins are 3 meters wide, east-west trending. You can see Volok, for example, here can be traced up to 3 kilometers. All the vein systems remain open along strike and down dip. We've extended them very, very successfully through drilling over the last few years. We have extensions of, over 100 grams per ton intercepts, over 200 grams per ton, very, very high grade. And there's a lot of room not only to extend the known veins to the east and to the west, but also potential for the blind discovery of parallel as well as stacked vein systems in a 9-kilometer trend, where periodicity suggests every 400 to 600 meters there's a parallel vein system. So big potential here, and actually an area of the property that not only has very high grade, but also provides an optionality to bootstrap this project into production, leveraging the permits, leveraging the mill, leveraging the portals, the underground workings, the tailings facilities, as well as the skill set that we have as an operator. Now, the real, meat and potatoes of the project is really the bulk tonnage. So this is where we have the entirety of the resource. This Taurus deposit sits at Cassiar North, just a couple of kilometers north of Highway 37, but accessible by the Cassiar paved road. So at 0.4 cutoff grade, we have 410,000 ounces indicated at 1.43, with an additional 1.93 million ounces inferred at 0.95 grams per ton. That's combined resource 2.34 million ounces, just over a gram per ton, starting at surface, with 91% of the ounces occurring within 150 meters from surface. On average, overburden is 10 meters, and the footprint of the deposit is just over 1 square kilometer. And not only open for expansion laterally and at depth, but also with a lot of room to expand and infill within the footprint of the deposit, as well as within the different pits that we have here. At a 0.3 cutoff grade, which is what most gold exploration companies are using these days, our resource is already almost 2.6 million ounces. So that's close to 14 billion Canadian dollars worth of metal, all very close to surface. And again, this is just a very small footprint, just over 1 square kilometer out of 590 square kilometer land package. So this is quite valuable. And also worthwhile mentioning, this is also an area where there's an historical mine where 35,000 ounces were produced here in the 80s with gravity flotation and cyanidation circuits. And that gives a lot of comfort into the metallurgical profile of the deposit as well. Here in this slide, you can see some of the drilling we've done in the last few years. Is to actually, these yellow dots that you see here is the location of the drilling that we've conducted between the most recent as well as the previous resource update. So we drilled, just over 3,000 meters around the Taurus deposit. So we're able, with that kind of drilling, to increase our resource by around 900,000 ounces. A very substantial increase with a very high hit ratio. Last couple of years, we had a 100% hit ratio cutting gold and expanding mineralization, which is really what you want to see. And there's a lot of room to continue to grow, as I just mentioned so far. So we have the Taurus deposit, which remains open. We believe that we have the potential to connect the different pits and continue to expand laterally, as potentially at depth as well. So you already have a substantial foundational resource. We don't know how big the Taurus deposit is going to go, but something we've been also focused in the last couple of years is the New Coast targets. So New Coast is roughly 2 to 2.5 kilometers south of the Taurus deposits. It's within that 15-kilometer belt that I mentioned before, part of the kind of the what I can call the plumbing system into the Cassiar district that brought gold, throughout this area. The last 2 years, we put 9 drill holes there, all mineralized with a highlight last year being 141 meters at 0.89 grams per ton. So similar widths and similar grades to what we see at Taurus. And New Coast is a target that we believe has the potential to become another Taurus. So we have kind of a corporate objective of getting this to 5 million ounces. We don't think it's very ambitious given the geology of what we see. These two targets alone, New Coast and Taurus, could get us to that target, and that's something we're quite excited, especially because of the 7,300 meters we've drilled this year, and we haven't released anything. About a third went to the Taurus area to continue to step out, and about 2/3 into the New Coast area, where we have very significant step outs. So we're really trying to pursue and define what might be the potential there at New Coast. But the potential for expansion of the bulk tonnage material doesn't end at New Coast. Snow Creek, which is roughly 3 kilometers to the east-northeast of Taurus, we see similar style of mineralization and quartz veining in the same orientation as the Taurus deposit. So we believe to be a big center of gravity and potentially connected to the Taurus deposit itself. Lucky we've drilled there and we find mineralization. The main mine, which is roughly 5 kilometers south of Taurus and 2.5 kilometers south of New Coast, we hit the 237-meter intercept at 0.69 grams per ton, which is also looks very promising as well. But we're seeing consistently in a very, very large footprint that is many, many times the current footprint of the Taurus deposit. We see similar style of veining, alteration, and mineralization, which is indicating that we have potentially a much, much larger system. Late last year, to really help us and provide some more data and really help us guide drilling and help us prioritize different drill targets, we've conducted quite a bit of work. We completed 2 soil grid surveys, one to the south and one to the north of Taurus, provided anomalies on both sides, which is indicating potential extensions of Taurus to the north and to the south. We conducted quite a bit of mapping exercise for roughly 11 square kilometers, around the Taurus deposit, including the New Coast target with excellent results as well, and geophysics for over 70 square kilometers, centered both around Taurus as well as the high-grade vein systems in the south that provided us with very exciting anomalies as well that we're looking to follow up as well. Not wanting to get too much into the geology, but just wanting to highlight some of those results, especially the mapping and sampling. So if you remember, Taurus has on average 10 meters of overburden, but every once in a while we have the bedrock that carries the mineralization that carries the gold sticking out of the soil, and we've collected grab samples in most places we could find the outcrop. And what we're seeing consistently is, again, that similar style of veining, alteration, and mineralization with grades similar to the Taurus deposit. A lot of stuff 0.5 gram to 2 grams, although you have some outliers of 2, 3, 7, 4, 5, 25 grams per ton. And you can see, these white dots that you see here are the 9 drill holes we have at New Coast historically. You can see the outcrop with the grades. Looks like this area looks pretty exciting in terms of the grade of the outcrop that you see around there. And this is exactly an area where we put 2/3 of the drilling. And as well as here at Hopeful and Our Rock, as well as Snow Creek, we're seeing that outcrop with the grades that in the mineralization, veining, and alteration that we love and like that we see at Taurus. So a lot of similarities and potential expansion for the Taurus deposit or potentially different pits as well. So pretty exciting. So in this same area, just to give you a sense of where we drilled the 7,300 meters, we've allocated just over 2,000 with step outs at the margins of the Taurus deposit to continue to expand mineralization there. And about 2/3 of the drilling, just over 5,000 meters at the New Coast area. Again, we already had 9 drill holes here. We put 11 more here. So this is an area that we see a lot of promise. We put out a press release in September with a core picture from our deepest drill hole to date at the project as an operator at New Coast, 720 meters long. Remember, at Taurus, 91% of the ounces are within 150 meters from surface. So the visual indications were very promising. It looks like what we love in like at Taurus, hydrothermal alteration, quartz veining, pyrite, and the results are pending. So stay tuned for that. We also pierced through a sedimentary layer, which kind of adds another evidence of the stacking concept that we have. We believe there's stacking of mineralization within our district. So that has implications not only for New Coast, but also areas at Taurus, where we pretty much only drilled to the first stack layer and not below that sedimentary layer at Taurus, which is roughly around 300 meters below surface. So this is very exciting. This is coming out soon. In addition to the drill results that we'll be releasing starting, imminently and probably up to January or maybe even February of next year. Right after that, we're going to be releasing metallurgical studies at Taurus, although we have historical production from the Taurus area. And we're also looking right after that to release our first PEA on a project as well. So a lot of news flow. This could be an excellent catalyst for investors as well. And right after, we're going to go back into the field and continue to advance and de-risk this project through drilling, through economic studies, and eventually to a mining decision over the years as well. So just to recap, a lot of catalysts ahead of us. We have a great project that checks all the boxes. We have great infrastructure. We have permits in place. We already have a very significant resource that is growing. A lot of room to expand and discover within this massive land package. We have a team that has done it before and has the potential and the skill set to take this to production. We operate by the highest environmental standards in the world. Where we operate, we have full community support. We're extremely undervalued, and we have a lot of upside, not just by re-rating to similar valuations to our peers, but also via the catalysts that we are delivering over the next few weeks and months coming. So maybe with that, I thank you for listening very patiently, and maybe we can go to some of the questions.
Awesome. Thank you so much, Marco. And there were a lot of really great questions in the chat. If you don't mind, there's a couple I wanted to go through too, just based off the presentation we just saw. So I'm going to run through a couple, and then we'll get to those great questions in the chat. But I think we should have time for all of them today. If you do have additional questions in the chat, please shoot them through. Happy to get to as many as we've got time for. So I know the timeline shows that PEA delivery in Q2 of 2026. Given you've already got 410,000 ounces indicated at 1.43 grams per ton and own that permitted 300 ton per day mill, what are the economic sensitivities that you're modeling into the PEA right now?
Well, I think, first of all, I think it's important to highlight we have 410,000 ounces indicated, but we have an additional 1.93 million ounces inferred for a combined 2.35 million ounces at a 0.4 cutoff grade, or a combined 2.6 million ounces at a 0.3 cutoff grade. So that's really substantial. That's close to 14 billion Canadian dollars worth of metal, starting from surface and open. And this is just on what we have. We don't know what's coming there in the drill results. So I mean, it's obviously we don't have a PEA out, so technically I cannot be commenting on the economics of the project until that's out. But you can look at similar deposits that are this close to surface, with this level of infrastructure, with this grade, and the cost assumptions for this type of deposit or the all-in sustaining costs metrics for some of the comparable projects are very, very attractive. It's very rare to see anything below or above $1,500 per ounce all-in sustaining costs. So I think this is the beauty of the current gold price. The margins are just expanded for everyone so nicely, and obviously that's also going to impact us. And I think it couldn't be a better time to come out with a PEA and translate these grades, this topography, this infrastructure, deposit is this close to surface with also a very beautiful geometry. If you look at the cross section here, and you can imagine what the cost metrics and capex metrics will be. And I think we have a very exciting, very compelling project here that I think it's gonna really translate really well when you see those numbers. Now, I can't be speculating on the numbers, but
Of
I,
course.
I would advise everyone to look at some peers with similar grades, similar type of deposit, and you can get ahead of the game by looking at those and making some assumptions, and especially when you consider the valuation where we are.
There you go. And just checking on your strategy, are you looking at a phased approach that would leverage the existing mill for early cash flow from that high-grade Cassiar South veins while developing Taurus as the larger open pit operation? Is that broadly the plan?
Well, we're definitely considering that. So it is a massive advantage. Now, so like I think the real value, obviously, from the project is the bulk tonnage because we have the size potential, and we have an ambition to be able to eventually define a 500,000 ounce production district here per year.
Sure.
Now, we're still, of course, it's a forward-looking statement. We're still, only at, around or just under 2.6 million ounces. So, there's a lot of work that needs to be done. But given the fact that we have, as you mentioned correctly, mine permits already in place, and a fully unpermitted mill that's specifically well designed for the high grade, that gives us a bootstrap optionality that almost no one in the exploration space has. So the mill is in good condition. We have mine permits. We have the mill is also not only in good condition, but it's fully owned and permitted for 300 tons per day. The grades are between 10 and 20 grams per ton there. So very high grade. We don't have a resource there, but there's several sections that we've extended. So there is a potential to put a resource here on the high grade. You wouldn't be in this, in anywhere close to the scale that we have on the bulk tonnage. But it could give us an opportunity. Imagine if you assume like a 20 gram per ton material going through the mill, that mill could be producing around 60,000 ounces a year. So we've been looking into what could internally what could be a capex for something like this. So to basically refurb the mill, dewater the portals, do a bit of screening and bolting on the underground, drive the underground for a few 10 more meters to get to the end mine sections of the high grade veins. That's probably like around a $20 million exercise, $25 million exercise. But of course, what we really need to do here at the Cassiar South is extend these veins because we don't have more than 2 years worth of feed for that mill, and it will be important to be able to extend that to over 5 years there. So there's quite a few steps that we need to get there to be able to, and of course, more importantly, have a solid mining plan. So there's a few steps that we need to get there, but we certainly see the value there, especially with the gold price where it is. It's being in production is fantastic with these gold prices. So we're very, very seriously looking at about that potential, and we're studying that internally, and we'll be communicating with the market as we assess these opportunities for a bootstrap, because it could be a very attractive bootstrapping opportunity because it could give us cash flow that then we can use to fund the growth of the bulk tonnage and eventually the acquisition or building of a bigger mill to process the bulk tonnage material where we have the entirety of the resource right now.
Great. No, appreciate that extra context a lot. One thing I wanted to ask is the historical recoveries at Cassiar South averaged 93 to 96%, but the Taurus deposit, as I understand it, represents pretty different mineralization style. So really, what gives you the confidence in processing efficiency against both those deposit types?
Well, two things. One, I mean, the best metallurgical study is historical production, and like what I call, with so the high grade underground veins with this mill, their recoveries average 93% and up to 96%. And there's like multiple companies operating at the same time. The mill receiving ore from from different parties, and not probably tuned up to the best potential recovery. So I would assume there's some upside here on the high grade veins in terms of the recovery. Over 314,000 ounces produced on the high grade veins in the south. So a lot of comfort there. And it's golden quartz vein, so it's very straightforward processing on the high grade underground veins. On the bulk tonnage, we also very comfortable because one of the past producing mines was coming from this area, and there was actually a very similar mill on site, right next to the Taurus deposit, and that similar size. And that mill processed the material from this Taurus East mine. So 35,000 ounces were recovered out of there, mostly in the 80s. So that's a substantial amount of production. And like we have historical records, which are imperfect because it's only a few pieces of metallurgical recovery and assays from production, but they demonstrate between gravity flotation and cyanidation recoveries over 90% as well, which demonstrates that there's certainly a lot of easy processing material, if not all, here. So that gives us a lot of comfort. And on top of that, we're going to be doing this metallurgical. We're actually undergoing metallurgical studies right now to really make sure we're comfortable with all the domains and the entire resource. To translate that into a metallurgical study that also is going to feed the PEA. And I'm pretty excited to get that and and eventually announce the results because I think that will be also a big catalyst for the company as well.
Awesome. Now I know you've positioned Cassiar as having an M&A exit strategy, and M&A obviously is heating up right now. But as you mentioned, at $11 an ounce EV, you're trading right now at a discount to big Canadian gold M&A transactions like Probe, Northern Superior, et cetera. So my question to you is, what catalysts beyond resource growth do you think are going to close that gap and make Cassiar really hot to the majors and intermediaries that are looking to consolidate right now?
Well, I think Cassiar might already look very hot for a lot of the intermediaries, and that's all I'm going to say on that front. It's obviously the catalyst. Just on what we have right now, I think there's a potential for the re-rate just by creating awareness of what we already have. There's no reason for Cassiar to be trading at a significant discount to peers when we have similar grades. We're closer to surface. We're literally at surface. We're all cropping. We have paved road access, grid power, water, mine permits, infrastructure, mill, underground workings, portals, tailings facilities. So we actually should be trading at a peer. So just on what we have, awareness could be the catalyst to actually drive our stock price up. I'm seeing deposits similar size and lower grade to ours within our region, like British Columbia or the Yukon, which are trading $200-300 million or more market cap. So that's one. Just awareness could be the catalyst. Now, second, we have all of these catalysts coming. We have drill results. We have metallurgical studies. We have PEA. And I think these are catalysts in de-risking activities that could really help provide a catalyst and narrow that gap, or actually potentially put us at a premium to some of these peers. So everything we're doing has a potential to do that. And also there's other activities that I cannot speak right now that are confidential, that could also generate catalysts that could take us there as well.
Sure. No, I really, really appreciate answering that to the best of your ability there. One thing, looking at the Taurus deposit cross sections, as you know, there are gaps in the resource model that are attributed to lack of drill data, really more than anything right now. I'm going to ask you a bit of a forward-looking crystal ball gazing question here, so bear with me. But can you quantify the expansion potential? Are we talking 500,000 ounces, potentially more, based on 2024 drilling and geological modeling?
Like in these gaps that are within the pit constrained resource, I would be conservative and say, definitely less than 500,000 ounces. Now, the pit is you can see here in the black area, right? The black area is basically the areas of the pit, or in the cross section as well, that currently don't hold any resource blocks here. So there's quite a bit of potential there, but it's not only within the pit, there's a lot of room, and we have a lot of drill targets within the pit constrained resource, including some that are in some soggy areas that we would like to drill in the winter. And we have a lot of targets for a winter program. But if you look outside of the pit constrained resource and within the different pits that we have here in this map view, for example, there's actually, I don't know if you can see it, there's some drill hole traces. Most of the drill holes are mineralized. So we believe we clearly have the potential to connect these pits and expand mineralization and step out there and connect the dots, and as well as the potential to continue to expand laterally, and the potential at depth for that stacking concept that we've see again and again throughout the district as well. So when we're talking about that, then the potential is way bigger than 500,000 ounces. But within the pit shell, it's probably below 500,000 ounces.
Great. No, appreciate that. One I want to throw at you is that you've drilled 141 meters of that 0.89 at New Coast and identified similar bulk tonnage characteristics at Lucky, Oric, and some of the other regional targets. So I just want to throw a hypothetical at you. If even one of those prospects develops into a deposit, let's say even 25 to 50% the size of Taurus, how does that change the district scale story and economic proposition for Cassiar?
I mean, I think any of these targets, especially New Coast, I would be extremely disappointed if it just becomes like 25% of the size of Taurus. When you look at the footprint of New Coast here, and the amount of outcrop that we see around New Coast, I certainly see the potential for being, as big, if not bigger than Taurus. So like our ambition, for example, just for New Coast is higher than the current size of Taurus. And again, Taurus remains, as was just mentioned, there's a lot of room to grow at Taurus. We haven't really sterilized any significant part of the property. So, I believe just New Coast alone together with Taurus could get us over 5 million ounces. But we have other targets that we're really excited about, like Snow Creek could be one. Lucky could be another as well. Even the main mine with the intercepts here, but most of our land package hasn't really seen boots on the ground. So these are just some of the targets, and of course, as we drill and expand and prove it up, we certainly have the indications of a much larger system through outcrop with mapping and sampling, or geophysical anomalies through IP or drone mag or VLF. But we're looking to really prove that up, and to be honest, we have a corporate objective of getting this to 5 million ounces. Honestly, with the geology that I've seen so far, I think that's a very 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 conservative corporate objective for the company. There's potential for a lot more than that, but you can't put the cart ahead of the horse, and we're systematically going through the different systems, and actually, some of the drilling that we've done at New Coast, for example, if you look at the distribution of the drill holes right now, we clearly see the potential to, depending on the assays, which we're going to have to wait for a big system there at New Coast. And we're looking forward to, not only see the assay results, but also, going through the different areas and targets, for example, Auroch or Snow Creek or Hopeful, that we believe have the potential to add a lot of ounces and multiply our resource base as well.
Okay. And I just wonder if you ever put pen to paper here. I know you guys have all that existing infrastructure, mill, permits, roads, power, camp, airship, the whole run. Any sense of what it would cost for another company to replicate what Cassiar already has in place? Is there like a sense of what that amount is?
Yeah. So between, paved roads, power, mill, underground workings, portals, tailings facilities, camp, access roads, it would be definitely north of $200 million. And that's actually, another way to really highlight how undervalued we are. We're trading at a massive discount just to the replacement value of the infrastructure, let alone, the contained metal value in the resource, which is in the billions. So, it's it's really fantastic to have all of this infrastructure already in place, and it's a great platform because it really highlights how undervalued we are. It allows us to operate very efficiently today, and also significantly lowers the barrier for development as well, because most of the infrastructure is already here.
Okay. One more from me, and then I'm going to throw it. I know there's a whole bunch in the chat. I'm going to try to get to as many as I can today. But Cassiar has completed extensive IP surveys, drone magnetics, the VLF in 2024. I'm obviously not asking you to break disclosure rules or anything like that. Don't want you to release anything before there's a release. But can you discuss what you're hoping the surveys will reveal? Are you looking for extensions of known mineralization, or could these identify whole new targets that haven't been drill tested in the big district?
Well, it's really all of the above. So we completed those, that field program, which is very fulsome and comprehensive with several techniques, and a lot of data collection from there. So we as I mentioned before, we really haven't sterilized any significant part of the property. So we're just wanting to, and if you look at the drill results, we pretty much been hitting every single drill hole. So definitely in the last few years, and to a certain extent, to a large extent, the years before too. So what we have, for example, with IP measures conductivity and resistivity. We did our first orientation survey in 2023, covering roughly 12 square kilometers, centered around Taurus, so we can see what the resource looks like and what side of the resource looks like, and see what potential extensions and indications it could provide, given that we have a high correlation of pyrite to gold, and the pyrite, the IP has a potential to highlight the pyrite there. So we've extended that for another 6 square kilometers, covering the new coast corridor, and it provided anomalies throughout the entire system. The same with drone mag as well, provided another layer of evidence that allow us to better target and prioritize the different drill targets. The mapping and sampling as well, for roughly over 11 square kilometers, where we're basically sampling the bedrock, and we're seeing consistently the same style of veining, mineralization, and alteration as we see at Taurus, in a very, very large area. That's indicating that the system keeps on going. The VLF as well, it provided us with anomalies for the extensions of the high-grade veins that we know exist, for example, at Q-Second vein, on the Cassiar South high-grade and ground veins. Soil grid surveys as well to the north and to the south, with soil anomalies that are relatively well-defined, and highlight these trends that you typically see that are east-west trending for the extensional veins, where you see typically higher gold content in these corridors as well. So it was an excellent, it gave us 4 additional tools, great data sets. It confirmed our thoughts about a lot of things. It allows to prioritize the different drill targets, and all of them are pointing to the same direction. We see a much larger system that is currently defined, and we're working on it to systematically go through these, as we have been doing for the past few years.
No, appreciate that a lot. Now, Baron from the chat, I'm into the chat questions now. And I know there's a whole bunch. Like I said, if we run out of time, we got 13 minutes left. I will make sure the Cassiar team gets them, so don't worry. Those questions will still be hit. But Baron asked right at the beginning of the hour, basically, why doesn't Cassiar enter into a JV to take the tailings and cut a deal of revenue share to raise enough funds to drill the property without dilution? It's just a business strategy question.
Yeah, I mean, so we have tailings running around the gram and a quarter. There's about 35 to 40,000 ounces in the tailings that we estimate we have. So we're actually looking into that possibility of getting a partner to process the tailings. When we have a feasible project, we'll be the first to know. It's 40,000 ounces is not that much. I mean, it's a couple $100 million worth of gold in those tailings. But we certainly have that potential. But it's something that we've been exploring, and once we have a partner that can execute on that, because our team is very much focused on expanding what we have, and
Mm-hmm.
looking at the more sustainable and long-term opportunities for the company. The tailings, I think it's interesting potential, but I think there's a lot more opportunity elsewhere. I think it will be a much higher priority. For example, looking at a bootstrapping scenario, looking at the mill that we have, the mine permits, the high grade underground veins, or even like we have high grade material at surface.
Sure.
We have intercepted, for example, 6.6 meters at 22 grams per ton at the Torres East area. So there's some juicy grade right at surface as well.
Yeah, great. T from the chat asked, just a quick one. Are you cashed up through to the end of the current drill campaign?
Yes.
Awesome.
And then some more.
Yeah, there you go. Perfect. Baron from the chat also asked, why not lightly refresh the very extensive old drill hole data from the 50s onwards for free to lift the MRE for little cost so you can boost profile without dilution?
Yeah, so we have access to all the historical data. There's a lot of data. We've been using it in some parts, but you got to, first of all, you got to make sure that the data is solid and can be used safely. Typically, not only you want to see all the data and the state of the data and validate it, but also, which is what we did at Torres, have drilling that confirmation drilling that actually supports the data that you have, because if you're using old data and you're not 100% sure, that actually could jeopardize the quality of the resource, and that's something we will not compromise on. So we're looking to build we're growing this deposit for a deposit that can be mined, not something that we just want to put on a PowerPoint. So we've got to make sure that we cross all the T's and dot all the I's, and make sure that the data is sound and doesn't it and can go through a scrutiny of mine development or a senior producing company as well.
Great. Next couple questions I think were tackled during the presentation. During my questions, all good there. Tony B from Napanee, great name, asks, what community groups are stakeholders at your main project?
So we're in the traditional territory of the Cascadena First Nation. So it's actually the only group that we have. We have an excellent relationship here. I think I don't have a slide on this, but we really have a wonderful relationship. Right from the start, we meet regularly every year, either in our mine sites, in the community, in Vancouver. We spend a lot of time together. We do a lot of work together. All of our core access from all of our drilling since the beginning is procured from the community. We establish partnerships regularly. A lot of services are provided by the community as well. Garbage hauling, septic hauling. We always hires from the community as well. We're very proud of the work we do with the community, and we're very blessed by the excellent relationship that we've built together, and we're really looking forward to really bring more opportunity to the community through employment, to economic development, and by sharing the benefits of what looks to be a pretty massive or potentially one of the biggest gold development opportunities in British Columbia as well.
Mm-hmm. I got a couple of tough to answer questions from Daniel, but I'll throw them to you and let you tackle them as you can.
That sounds hard.
The first one is like a classic. I hear it on webinars all the time. When are you going to sell the project and to who?
Well, we don't know if you want to sell the project. I think we have a project that's so our chairman Steve Lewin, we were just having a conversation about this. For the right price, we'll sell the project. In my mind, that number starts with a B. $1 billion. I think this is reasonable given the size of our deposit and what we've done so far. That's really our corporate objective. Now, everything is subject to negotiation, but we have a project that is quite unique. When you have something good, you really have to hold on to it. It's very hard to find a deposit this big anywhere in the world, let alone in Canada in a safe jurisdiction, with mine permits, with infrastructure, with paved road, with grid power, and all the good things that we have. And we've only scratched the surface on this project, so there's a lot of room to grow here. So we have the skill sets within the company. We have people that have a track record of discovering, permitting, building, operating, selling mines. So we can do a deal at the right price. If not, we have the skill set to take this to production.
I appreciate that. I'm glad I asked, actually. That's why I like to ask the weird questions. Sometimes you get some interesting answers, so thank you. Couple more I think we've gone through. This one's worth just repeating. I know we talked about it today, but what is the current guideline for when the PEA will be released?
Yeah, so first half of 2026, so probably around the second quarter. So we wanted to get it out for PDAC, but we don't know if it's going to be right.
Perfect. And early days, of course, but looking for in the chat, somebody wants to know what the broad timeline for going into actual production is.
Well, it's a good question. So internally, what we're looking at as a reasonable timeline for the bulk tonnage for Taurus, and the areas around it that could be included in a resource and eventually into a mine plan, we'll be looking at 2030. Now we also have a part of our property, which I mentioned before, the high-grade underground veins. They are very, very juicy, and we have already a fully owned permanent mill design for that. We have mine permits, infrastructure, portals, underground working, tailings facilities, etc. Power lines connecting all the portals as well. That could put us in a position to bootstrap that to production in a much shorter timeline. That will be a bootstrapping scenario. Much smaller production profile as well, but it could get us to production as a company and as a district much sooner. And then we in that scenario we use the proceeds and the profits from that production to then turn to the big prize that we see, which is the bulk tonnage.
Okay, I appreciate that very much. One from the chat is, how are you thinking about just generally financing strategy for the future? How are you plan to finance into production, basically?
Well, there's a lot of ways. Right now, I'm not looking at a financing anytime soon. So for the people that are waiting for the private placement, don't wait for a private placement. That's my first message. So right now we're trading around 20, 28, 30 cents Canadian per share. We're extremely undervalued. We have 147 million shares outstanding. There's about 50 million warrants that are priced at 50 cents. So the stock needs to double to see at least to double to start seeing those warrants getting exercised. So that would get us around 25 million to the treasury. These warrants all expire within the next year and a half. About 7 million of these warrants expire in December of this year. About 20 million in May, June of 2026, and then the rest, later in the year. So that would be my preference, to see the share price go to where it should be and get those warrants exercised. My second best preference would be to have potentially some sort of PE or strategic investment that could help us progress the project to where we want to see. Now, more long term, if you're looking at production, it's typically what you see is 75% of the capital is financed by debt. So we might be looking in a again, we don't have a PEA, but something in the 200, 300, 400 million capex. 75% of it financed by debt. You can always do like a little bit of streaming. You can pre-sell say 100,000 ounces, which at current gold prices could over several years, that's at current gold price, that's $400 million. So pre-sale with this kind of gold prices, it is also quite helpful. And obviously you always have to have a substantial equity component, but you got to go through the you got to go through the bridge when the time comes. And I think right now we're still quite undervalued. You need to revalue the company and then assess what are the best options that are the least dilutive, and generate the best value creation for our shareholders as well.
Awesome. Well, Marco, thank you so much for both presentations. We get to the end of the hour, and for letting me grill you and the audience. There are, I know, a bunch of questions. Got to almost all of them. There's only a couple hanger-on questions. I'm going to make sure that the team at Cassiar gets those. Marco, these were really very thorough. I hope everybody in the room has a much better sense of Cassiar now. Appreciate your time very much, and hope to talk to you again soon.